Wakey, wakey, rise and shine, guys. Rise and shine. Get out of bed, because Bitcoin is above 43,600 and we are entering a new crypto cycle. We have some confirmations today that we're entering a new cycle. Crypto is completely driven by cycles, and if you can identify the cycles and identify the narratives within the cycle, that is what makes the difference. That is what makes the difference between whether you make lots of money or life-changing money. So today, we're going to look at why we are getting into a new cycle. I'm going to show you what's driving the new cycle. I'm going to show you which narratives are playing out, and then we can decide if we want to be investing in the cycle and we want to be putting our money. So let's get this show on the road. Yo, Banter fam, welcome back. Good morning, good afternoon, good night, especially to those people that didn't sell a single token in the 2021-22 bear market. If you didn't sell a single token in the 2021-22 bear market, well, then you can kind of go out and you can say, well, I survived the bear market of 2021-2022. And it was a bear market, I'll tell you, it was a bear market, even though it was only 87 or 88 days from Bitcoin's high over here to the where we were to the turnaround. It was an 87-day bear market, and those are the kind of bear markets that we can now start to be expecting, because we're going through new crypto cycles. The cycles are very, very, very different now, and I don't think that we'll ever see another 2 or 3 year crypto bear market. But in fact, I think what we'll see is we'll see a whole lot of different market cycles, and if you can identify those market cycles, if you can become a cyclist. No, you can't say that. Can you say that? Yeah, if you can become a crypto cyclist and you can identify, okay, if you want to become a cyclist, you don't have to wear those skinny pants with that thing on your bum. That looks stupid. But if you can become a crypto cyclist and you can become an expert crypto cyclist, then you can make a lot of money. And what we're seeing now is that we are breaking into a new cycle. And if you are going to be in this crypto cycle, and you can master the art of this crypto cycle, well, then you're going to make huge money in this crypto cycle. And the good news is that because these cycles now are much shorter, and we're not getting these 2 to 3 year bear markets. So I hope we're not going to get these 2 to 3 year bear markets. Well, if you can identify when the cycle starts, and you can identify the narratives driving the cycles, and you can see the signals that power the cycles, then you can place your bets accordingly, and you can place your bets early. And I think that placing your bets early is placing your bets now, because what we've seen recently is we've just seen the cycle change. And I'm going to show you today why I think that the cycle has just changed, and how you can actually become a crypto cyclist from the comfort of your own sofa. So you can put on tight pants if you want, you can put on one of those tight shirts, but then you should sit on the sofa wearing that, and maybe you can even wear a helmet, because this show is going to make you a crypto cyclist. It's as simple as that. You're going to become a crypto cyclist. So if you're new to our channel, welcome. Subscribe to our channel quickly. Do it now. I'm going to call this channel Crypto Cycling, because we are cyclists. We can ride the crypto cycle. If you're new, just so you know where you are now in the zone. In this zone, you are surrounded by other crypto cyclists. In the morning, we have a morning cycle where we go into the DeFi cycle, then we go into the charting cycles, then we go into this fundamental show, and then later on, we've got a huge, no, not Lance Armstrong. Actually, you can be Lance Armstrong here. You can take illegal substances while watching the show. I don't mind. In fact, it could make your viewing experience a lot better if you... You know what we should do? We should take illegal substances during the show and see if we become better. I mean, who's going to test us? Who's going to test us? For those of you who are right now smoking illegal substances, welcome. For those of you who are not smoking illegal substances, also welcome. I know there's a lot of you smoking illegal substances because a lot of you send me shit in the mail. I get shit in the mail. People send me gummies and shit in the mail. Thanks, love them. Please keep sending. That's all I can say. I mean, yeah. Where was I? Okay, so now we have a whole lot of shows. We have a DeFi show in the morning. Let's quickly go into Crypto Banter and show you guys what's been going on here today. So not Stoner Club, Cyclist Club. Okay, so we have this show which is live right now. We had Sheldon's show earlier, unbelievable show about the markets. Then we had this show. You missed this show, then you're an asshole. Miles' first show on Crypto Banter. We spoke about Phantom and we spoke about a whole lot of stuff on Phantom and DeFi and Phantom. Miles is a fucking gem. Miles is going to be the best guy in DeFi, just like our man Hustle is the best guy in gaming. And if you didn't watch Hustle's show last night on the Ultimate DeFi Portfolio, then you're an asshole. That's just the way it is. There are 4 shows a day for you now. We're gonna keep increasing the programming, but for now, 4 shows a day: 1 DeFi, 1 charting, 1 fundamentals, and 1 gaming. And that is pretty much all you need to know in crypto. That is all the one you need, all that you need to know to survive in this crypto game. Just before we move on, we do have another another contributor to the Banter bags. So it is a Launchpad which is built on Phantom. It's called Tortorus. It's an unbelievable launchpad which is donated about $1,000 into the Banter bags. They built on Phantom. They've got an unbelievable blue chip investor base, which include, I'm going to read them out to you: Black Edge Capital, Solidity Ventures, Paribas Investments, Genesis Block, GBV, Spooky Swap, Banter Capital. That's us. We're invested. 3 Commerce Capital. So lots of people coming in here. Lots of people that we know coming in. And yeah, this is a great launchpad on Phantom, highly curated project, very fair performance. So yeah, that they have given money into the Banter bags. The Banter bags, remember, if you're a subscriber to this channel, you can win the Banter bags. How do you win the Banter bags? Just be a subscriber. And we're going to choose subscribers at random. And when we get to 700,000 subscribers, we give away the Banter bags. And I think there's a couple of $1 million in the Banter bags already, even after this correction. What else? If there's nothing else, then I'll just get on with the business of the day, which is, of course, the new cycle and why we're all cyclists, because that's exactly what's happening. We are seeing a new cycle in Bitcoin, and we're seeing this new cycle because when we look at the Bitcoin price, we now closed above every single level that we needed to close above to confirm that we're actually out of this bear cycle. So the bear cycle started over here on the 9th of November when we hit the top. And you can pretty much say that it ended on the 22nd of January or 23rd of January when we started to turn up. And there were many skeptics. About whether or not we've turned up. But now we've kind of broken out all the skeptics. A lot of people said, okay, let's break 38. Let's break 41 because 41... I think there was a very critical support level around here, which I think was the 37, 38. And you see, we broke out of the 37, 38. And then people said, no, you got to break out of the diagonal line. So we broke out of the diagonal line. We closed above the diagonal line. We printed this higher high. We printed this higher high. So now all the skeptics are now starting to see that, okay, you can say what you want, but we are actually broken all support, and we are actually entering a brand new cycle. And we can see that the same thing happened here in September last year and again in May last year. So if you go back to May last year, you can see that we had this like downward trend over here. And then eventually we broke it. You see, eventually we broke it. And when we broke it, that is when we went back and we started hitting the all-time high. So that's where we're at now. We've now, it looks like all the indicators are showing that we've entered this new Bitcoin cycle. And if you survived, if you didn't sell any tokens and you are still here, then you can kind of pat yourself on the back and say, congratulations, you survived the crypto bear market of 2021-22. If you were here last year in May, you survived the 2021 bear market. We kind of have these short bear markets, 3 months bear markets, and then 3-4 months up markets, or 6 months up markets, and then 3 or 4 months bear markets. And the shakes are quite important. We're going to talk about why the shake in the cycle is so important. But if you if you did survive the bear market, well, then congratulate yourself. Also, maybe smash that like button. Just smash the like button just to remind us that you survived the bear market. We have to take our hat off to Gareth Soloway, because he's been on the show a few times, and he said, Bitcoin continues to march towards my near-term target. He said there's going to be an epic resistance around $46,000. Bang, there has been an epic resistance around 45,559, epic resistance, bringing it back. But ultimately, this bull market seems like it is back intact. It would really, really, really surprise me if this bull market wasn't intact, even though I think we could go down and we could test the bottom again. So we could go back down. And Sheldon was saying earlier on his show that you possibly could go back down to the 41, 42, and maybe even $40,000 level before we continue this up run. And that's where the buying opportunity is. Why do I think there's a buying opportunity? Because we've broken upwards in this trend. Now we'll probably have the retest, but because we've broken the trend, then it does seem like we're going to continue to go up. So it's very important that you keep watching this trend line and make sure that we don't fall below this trend line. As long as we're above the trend line, it does look like this trend is firmly intact. Lark Davis points out quite correctly. He says, we just went over the 50-day moving average. The last time that Bitcoin moved over this 50-day moving average, which was after the collapse in May last year, which is what I showed you, Bitcoin went up 54%. The time after that Bitcoin did that, Bitcoin went up another 50%. So we've just crossed this 50-day moving average, and it does look like we are going to start the next leg up, which again shows you that we may be in the beginning of a new cycle. And every time we get these cycles, we seem to be breaking the highs from the previous cycle. So this time we would be chasing the high, the 69,420. It does feel like that's kind of where we're going. Someone else says, Blunt, at Smart Contractor says, last time we got a nice close above the 100-day moving average was in July, which was the start of an almost 100% rally. So another person that is seeing that we've broken this cycle. So another indicator that we've broken the cycle. So CoinMaster says, this is what this belief looks like, because funding rates are actually still negative, with negative long-short ratio, which is a recipe for a perfect short squeeze. It means that we haven't shaken out all the shorts out the market. And if we get another candle up, I keep saying this, if we get one more candle up, we could get those shorts by the and squeeze them so hard that we could even get a $5,000 candle. It can happen. And it does feel like we are in that cycle, and that the shorts are going to get squeezed. On the on-chain metrics, what I found here is I found this reserve risk indicator. The reserve risk is the incentive of long-term holders to sell Bitcoin. Remember, the more incentive that the long-term holders have to sell Bitcoin, the more likely they are to sell. The white line is the incentive that the long-term hodlers have to sell Bitcoin. Right now, they don't have much incentive to sell Bitcoin. The higher the price goes, the more incentivized they are to sell their Bitcoin. Right now, they don't have much of an incentive to sell their Bitcoin, which means that, again, on-chain, the signs are pretty healthy. The signs are pretty healthy. So we're here. We've survived the bear market. We survived the 90-day treacherous, terrible bear market of 2021-22. For those of you who made it, congratulations. For those of you that didn't, well, we'll see you 2 weeks before the next top. We'll see you guys. For those of you that dropped out and sold tokens, we'll see you 2 weeks before the next all-time high. That's when we'll meet you guys again. For those of you that survived, welcome. Well done. Congratulate yourself. Pat yourselves in the back. And I think it's time that we start getting used to these cycles, because I think that these are the cycles that we need in the market if we're going to have a healthy market. You cannot have a market that continues to go up. In the market that continues to go up, everyone gets carried away. We get high levels of long leverage. We get projects who start raising money because investors are making so much money so quickly. We get every project starting to raise money. Even shit projects start to raise money. And that's where we were. We were at a point where even the shittest projects in the world were raising $10 million in 24 hours without a strategy, without a game plan. Games were raising money they had PowerPoint presentations. Some of them didn't even have PowerPoint presentations. They were raising money. We need these clean outs in a market cycle to reset the market, to take out the tourists. And when I say tourists, I mean tourist investors. I mean tourist projects that are chances. When the market becomes tough, like the market was for the last 90 days, projects couldn't raise money. And unless you really had a good concept, then it was much harder for you to raise money. Before that, anyone could raise money on anything. You just said the word NFT, you said the word play to earn, you said the word Launchpad, and you raise money. Now it's different. Now times have changed. Now everything's different. Now you've actually got to be a bit smarter to make money. As an investor, you've got to be a bit smarter to make money. You've got to be more patient. As a project to raise money, you've got to be a bit smarter. So we need these clean outs every couple of months in the bull market. When things get overheated, we need a big shakeout and a big clean out to get everyone out. But the good news is that if you survive the shakeout, and actually not, even if you don't survive the shakeout, then that is where there's a lot of money to be made. And I think that Alex Becker nailed it. He nailed it today with one of his tweets. He said, look, one of the truest things I've seen in crypto is most people make a lot of money and lose most of it or go underwater in their first cycle. Then they kill it in the next cycle if they stick around. I know so many people who did poorly in 2017 and are worth 20 to 100 million now just because they stayed. You've got to be a veteran. You've got to learn to ride these cycles. Now, I must say, I'm one of these people. Why am I one of these people? Because in 2017, I made a lot of money in the cycle, but then this is what the cycle did to me. Here, let me take you back to Run's cycle of 2017. Run got in here very early in the game in 2015, 2016, and rode all of this all the way up to 2017, to the end of 2017, but then rode all of it down and landed up worse than where I started, much worse than where I started. But the good thing is that I stayed in the game. And that's the important part. If you stay in the game, just stay in the game. I killed it in the next cycle. I killed it in this cycle. That's exactly it. I killed it in this cycle because I stuck around. So if you didn't survive this cycle, that's okay. You will make it in the next cycle because that's how you learn. That's how you learn. You learn by messing up one cycle, but you're lucky because the cycles are now 3 and 4 month cycles and 6 month cycles. So you mess up one, okay, you survive a bear market of 90 days, and then you can get back into the next cycle. So now we're entering this next cycle that we're talking about. I love this because for those of you who play poker, this is a great analogy. This comes from a guy called Don Crypto, and he says, changing difficulty of the market. I can say one thing with certainty, and that is that this cycle was not as easy as the 2017 cycle, which was strange because more people that I know made more money in a much harder cycle. So the next cycle will likely get even harder. So the cycles keep getting harder and harder. Even though I'm not fully qualified to make this comparison, not knowing much about the trading the legacy markets myself, I'd still be confident in saying that crypto market is a much softer playground than legacy markets. The gap in difficulty closes each day as more gigabrains move over into the crypto space to profit off all the inefficiencies there may be. I reckon we've still got a few more years before the gap really closes, but regulations, even though I think they're okay for the space, will likely speed up the process a lot. More big established players will join the game. I feel like it's very comparable to online poker in the day. Even though I wasn't around in the early days, from what I learned, from what I heard, it was very difficult to be a winning poker player since the table was, it wasn't very difficult to be a poker player in the early days. But nowadays the tables are filled with regulars that play near perfect. So to end, yes, you will get plenty of chances and the market always gives opportunity. Don't rush it, but do use your time to improve, to try and make the most of it while you can. The market will become smarter. It's your choice to grow and improve with it or get left behind. For me, this is the most brilliant tweet and the most brilliant comparison, because it's exactly that. If you're here early, you're not playing against a lot of players. You're not playing against a lot of smart players, but you're playing and you're getting better and better. And when the smart players come into the space, when the smart players start coming into the space, by that time, you're so good. And even though the market is getting the market cycles are getting much smarter, that doesn't matter because you will still make a lot of money. So you combine this tweet with Alex Becker's tweet, and it's like people who failed in 2017, even though the market got harder, are now killing it in 2020 in the 2022 market. So that is where we're at, and I think that we're at a point now. Someone's saying, "Look at T-Share." Let's look at T-Share. I have been watching T-Share all day long. Yeah, we'll talk about T-Share. I'm watching it. Don't worry. Here, it's right here. All good. It's right here. I think that we won't get another long-term 2-year, 3-year bear market. I think those days are finished. I think it's all about 90-day cycles now, 120-day cycles, maybe 6-month cycles. But there are no more 3- and 2-year bear markets. And I'll explain to you why. Because the reason for a long bear market, in fact, the best way to explain it is actually to look at the last time, the internet. And when we look at the internet, you look at the NASDAQ. This is the price of the NASDAQ chart. And the NASDAQ chart had this parabolic bull run in the late 1990s and early 2000s. That was a .com bubble. And the reason why the .com bubble burst is because in this area over here, people were paying insane valuations for technology that didn't really work on the hope that one day this technology would change the world. Sound familiar? Exactly. That was 2017. So just like in the early days of the internet, people paid these insane valuations for concepts that could never work. They were absolutely unworkable. So what happened here was the market became so inflated that you got the big crash where people said, "You guys are crazy, pets.com, you could never do all of this shit." At this point here, the internet didn't work, just like the blockchain didn't work in 2017. And the market collapsed. And you know, in the .com bubble, it took the NASDAQ from, let's say, 2000. And the next time that the NASDAQ hit those levels was 15 years later. So you had such a big correction and you had a bear market. You had this huge bear market for a couple of years, and then only did the market start to recover. But after that, we never ever saw another prolonged bear market in the NASDAQ. Because what happens is, when you get a new technology, you get the cycle where there is enthusiasm and excitement around how this technology will save the world. And people get overexcited and the enthusiasm gets overheated and they give things insane valuations. And then what happens is you get this bubble pop. Bang, the bubble pops. And the bubble goes back down. And then you have a huge bear market. And then after that, you have a sustainable bull market, which goes on forever. So the NASDAQ bull market has pretty much gone on forever, except for the 2008 housing crisis, which was over here. Other than that, the NASDAQ bull market has continued pretty much forever. And we've had that moment in blockchain. We've had 2017 where we all were disillusioned in terms of how quickly the blockchain would change the world. But that's finished now. And that's finished. And we are now in an adoption cycle. And if you look at this tweet here, it says, eerie similarities between Internet 2000 and crypto 2022. The user base is around 6% of the global population. Both had a multi-year bull run hyped as break-tech technology, yet still thinly supported by actual cases. Monetary policy headwind, 6 Fed rate hikes in 1 year back then, and the same now. In 2000, the NASDAQ dropped 80% in 2 years and didn't recover for 15 years. But it was a blessing in disguise for the internet industry because we weeded out opportunists and gave real builders the room to build. It was absolutely brutal for investors. In 2000, I was there in 2000, I'm still here. Obviously, it doesn't repeat itself blow by blow, but the setup is so similar that I can't help to think that a multi-year bear market for crypto may be in the cards. Only missing ingredient is the blow off top. We're not going to get another multi-year bear market. Why aren't we going to get a multi-year bear market? Because we are tracking internet adoption. This is about adoption. This is not about a disillusionment. This is about adoption. And what Chris Berniski says, he says, the 2020s may be the decade where value goes bust. In other words, all value stocks go bust. Growth turns into value, and crypto becomes the ultimate growth stock. Because crypto is the ultimate disruptor. That doesn't mean that 2022 won't be rocky, but if you zoom out and look at it, if you compare it to the internet cycle, you are pretty much here. which means that you're early, but you're not too early. Because if you were here too early, you would have had to ride all of this just to get to this point. But now is the best time to be here because you're not too early anymore. You're not too early anymore. You're at the right time exactly. You've missed the big disillusionment and the rebuild and the big shakeout. And now you're kind of here. And what you're doing is you're joining this new cycle. And this new cycle is not a cycle of hope and stuff like that. This new cycle is actually the cycle of adoption. And that is the most interesting part. The most interesting part is that when you start seeing companies like Amazon and Google and Uber and Facebook get adopted, that is when you get the real exciting part. So if you're here now, you've missed all this shit. And where you are now is you're probably somewhere here. You could probably compare it to COVID. And now you're probably somewhere here. And it's all up from here as crypto becomes the new growth narrative. It's all up from here. Now, yes, of course, we will get, it won't be a straight lineup, but what you're going to get is you're going to get 3 to 6 month cycles that keep repeating themselves. So yes, maybe you're going to get 3 to 6 month cycles now because the Fed is increasing interest rate, but then you're going to get a 3 month cycle. And if we just saw a 3 month correction cycle, now it looks like we're starting an upward cycle. The cycles are going to get shorter. But if you can identify the cycles and you can ride those cyclists and you can become a cyclist, people phoning me during the show, we've discussed this. Hold on, let me just switch off my WhatsApp. So if you can become a cyclist and you can ride these cycles, that's how you're going to make tons and tons and tons and tons of cash. And I want to show you a few cycles that we can talk about and how to identify these cycles, because these cycles are like pretty similar. And if you are a cyclist, then sorry, someone asked if you can adopt me. Someone just said, can you adopt me? No, bro. No. I mean, post a pic in a bikini, then we can talk. For anyone who wants to be adopted. So if you can identify the cycles, and you can identify the cycles because cycles are pretty much all the same, and you can identify the narratives in the cycle, then you know when to get into the market, but more importantly, you know how to ride the market up. Now, this is what I want to show you because all cycles are actually exactly the same. They're all exactly the same. They all have a catalyst. You remember the last cycle? This was the catalyst for the last cycle. Do you remember? Here we go. Tesla buys $1.5 billion in Bitcoin. That was the narrative or the cycle that was the catalyst for the last cycle. So all cycles have catalysts. That's the catalyst. Joanne, don't shout at me. Just send a picture in a bikini. So all cycles have catalysts. The catalyst in the last cycle was the MicroStrategy buy, the Tesla buy. That started the cycle. Then we started to get all the signals that we were in the cycle. We broke all the technicals. We started to get the meme coins running, remember? Then we got a signal that we were in a new cycle. Then we got the drivers for the cycle. What are the drivers? Solana was a driver. Layer 1 narrative was the driver. We got all these drivers and these narratives for the cycle. And we got that. We got Solana. We got play to earn. The cycle before that, the drivers were DeFi. Now, if you could have identified that, if you could have identified the cycle and you would have known where to put your chips, you would have made money. The last cycle, if you would have identified play to earn or you would have identified metaverse, you would have made money. So the trick is to be a cyclist. How do you become a cyclist? You put on tight pants. You put on that terrible shirt. You put on that terrible shirt. And you start identifying the narratives that are going to power the cycle. You start looking for the signals. You start looking for the catalysts. And when you do that, then you can start riding the cycles. So if you think about the cycles or the narratives, the first 2013, Bitcoin is all about drugs. 2017, it's the retail investor getting in. 2021, what is 2021? 2021 is the institutional investor. But now there's a new cycle. What is this new cycle? There's a new cycle playing out. 2013 was the drug cycle. 2017 was the retail cycle. 2021, everything was about institutions coming into crypto. But now there is a new cycle playing in our thing. And these cycles are all similar. So once you can identify a cycle, once you identify the cycle, then it's like clubbing seals. Then it becomes super, super, super easy to make money. Why? Because then you just go, you watch the flow of money from Bitcoin, then to Ethereum, then it goes to large cap alts, and then it goes to small cap alts. So if you just know when the cycle is coming and you can identify it early, then to play the cycle is so easy. It's so easy. It's like arriving at a club at 10 o'clock at night when everyone's drunk and you arrive there sober like this. It's easy. It just becomes so super easy. It's like it's easier than that Tinder Swindle guy, okay? It's just easier than what the Tinder Swindle guy was doing. By the way, did you watch that Tinder Swindle movie? Now, look, the guy does remind me of 0xSifu, okay? I mean, I genuinely thought when they started talking about showing it, I thought that the guy in Tinder Swindle is actually 0xSifu, okay? But those girls, like how dumb are you? How you meet a guy on Tinder for I don't know, I think she went like 2 dates with him. She's already taking out loans and sending him money. I mean, yeah, that guy was, I thought that guy was 0xSifu. Anyway, let's move on. Okay, so what is this new cycle? Because I guess if you can identify, we're now in the new cycle. If you can identify the cycle, you drive the narratives, well, then you just have to follow the same thing. You just go from Bitcoin. When you see Bitcoin moving, you move your money to the Ethereum. We just saw that. And then you go into large cap alts. We can start moving at that. Then you go into the small cap alts. And that's what I'm going to show you. It's so simple. So even Wells Fargo is now saying crypto could soon enter an inflection point of hyper adoption. So maybe the new cycle is actually, there's a drug cycle, there's a retail cycle, there's an institutional cycle. Maybe this new cycle is actually the hyper adoption cycle. Maybe that's what it is. And they wrote a whole report about this hyper adoption cycle. That's what they're saying. And remember I said to you that all cycles start off with a catalyst. And last time the catalyst was Tesla. We had Tinder man. I'm not Tinder man. My wife won't allow me on Tinder. She won't allow me on Tinder. It's a big problem. Speaking of which, my wife asked me. She asked me if I wanted to have a threesome. So I said yes. So of course I want to have a threesome. Who doesn't want to have a threesome? And then she said to me, "Well, so who do you want in the threesome?" Now the right answer to that is very simple. Apparently, you're not supposed to say 2 other people. You mustn't name 2 other people. You must name your wife plus 1 other person. Don't name 2 other people. That didn't go down very well. So if your wife asks you, do you want to have a threesome? And she says, who do you want to have it with? You just say 1 person. Don't say 2 other people where 1 is not your wife, because that you're not supposed to say that. I learned that the hard way. Okay, anyway, that's enough jokes. Wrong answer. It was the wrong answer. Now you tell me, Christian. When your wife says, do you want to have a threesome? Who do you want it? You just say, oh, this video is going to get banned. You don't say 2 other people. You add 1 other person. If you say 2 other people, that's the wrong answer. That's what I can say to you. Okay, if you follow that, let's move on. So remember I said to you that every cycle needs to have a narrative. Every cycle needs to have a catalyst. And the last catalyst that we got the Tesla catalyst, right? Remember that Tesla catalyst? We had our catalyst. And I think that this catalyst was actually the biggest catalyst that we've ever seen. Well, we've ever seen, but certainly the biggest catalyst that we've seen in a long time. And then we have the catalyst that we got was that KPMG in Canada added Bitcoin and Ethereum to its corporate treasury. Okay, so who cares? Square's got it on its corporate treasury. MicroStrategy's got it in the corporate treasury. Lots of companies have got it in the corporate treasury. Why do we really care so much about KPMG? I'll tell you why it is so important that KPMG is adding it. Because KPMG is the auditing company. KPMG is the company that advises governments and corporates around the right strategy to stay compliant, around the right strategy to stay audit safe and audit friendly. And when KPMG admits that it is okay to start holding Bitcoin, when the auditor, it's almost like when the SEC, when the auditor starts to say that it is okay to have Bitcoin on your balance sheet, or that it is good to have Bitcoin in your treasury, then that's a big deal. In fact, it's a much bigger deal than Tesla. Because, this is by Nod Agris. He says, when these large multinational companies that deal with dollars start buying, you need to pay attention. KPMG is one of those organizations that advises governments and large corporates. This is what the big news is. It's almost like if the judge, if the one that's auditing you, if the auditor is the one that's saying that they have Bitcoin and Ethereum on their balance sheet, then it has to be okay to have Bitcoin and Ethereum on your balance sheet. And they're setting a huge example, and they're making it okay to do that. But that's not the story. So read this. It says, of all the institutions and high-profile investors to go on owning BTC in the recent years, KPMG's announcement today is right at the top in terms of importance. Hard to overstate this one. Looks like a vanilla tweet. But then you scroll down and you see a guy called Paul Brody, PR Brody. And he says EY is still the only big four committed to public blockchains. The only one with a global engineering program on our own assurance, security, tokenization, and other tools. So what you can see is that you're now getting KPMG, and then you're getting EY, which is their biggest competitor, or one of the big four competitors out there, saying, no, hold on a second, guys. We're still the only one committed to public blockchains, the only one with a global engineering program, our own assurance, security. So they're having a fight around who is buying, who's going to continue to buy. They're literally sitting here telling you straight up that they are going to be the ones driving the price of Bitcoin. And you could ask yourself a question. Do you, given what you know now, have enough? And that, for me, is the big catalyst. We've now seen the catalyst for the new cycle. Now, you've seen the catalyst. You're also looking for the signals. The signals are here. You've broken all the technical signals. You've got meme coins running again. Remember what Mr. Biz said? He said that in the last bear market, dog coins, meme coins, signaled the beginning of a bull cycle. And they're doing it again. We had Shiba rallying, we had Doge rallying, and now we've got our own meme coins, which are actually rallying, and that is the meme coins, and that is NFTs. We've got this interesting, the meme coin budget has probably moved into NFTs. So we've got, not only do we have the catalyst for a new cycle, but we have the signals that we're in a new cycle. So now the next thing we have to do is just identify what's driving the new cycle. If we can identify what's driving the new cycle, and then we can identify the narratives, that's where we place our bets, and then we make the money. Simple as that. So what is driving this new cycle? What is the narrative driving this new cycle, this cycle of adoption? Well, I think it goes back to my tweet over here. And I don't know if you guys remember, but I tweeted out and I said, with what is going on today in the United States, you got Twitter, YouTube, Facebook, CNN, Spotify, and GoFundMe, all censoring the individuals. They've become censored, compromised organizations that are siding with government to protect the laws and legislation. When Twitter can ban tweets because you're not allowed to talk about COVID, and they can remove a sitting president because they believe that he's inciting hate speech. When YouTube can remove non-COVID related content. When Facebook can start having their fact checkers and start removing content. When CNN, no one watches CNN anymore. But I think we get more viewership than the whole of CNN. When Spotify start to ban Joe Rogan, when GoFundMe start to side with the government and take the money away from the truckers, those are the catalysts that you need. That is the narrative that you need to drive the bull. And Suzu said it yesterday. He said, the biggest alpha leak to Three Arrows Capital. Oh, no, he didn't say that yesterday. What he said, my bull case for crypto has nothing to do with money printing or risk on or risk off. Those are short-term things. It has to do with the great awakening of the sovereign individual and the understanding of the potential of peer-to-peer distributed networks to shape the nature of reality. So it's all about this censorship It's all about the censorship thing. And his partner, Carl Davis, says the 2020s are about self-sovereignty. This is a multi-decade trend that will transcend ownership, finance, health, and the way we live. No individual should have to bow before any other besides themselves. And it's quite cute because they're both partners in Three Arrows Capital, which is a great investment firm. But they got like this like bromance thing going. So like Suzu says something similar, and then Carl Davis says something similar. And then Suzu says the best alpha leak to Three Arrows long-term success is Carl Davis. So it's like they got like a bromance going. Like the one guy says nice things about the other guy. They both say the same thing. But they are saying it right. And the narrative may be the self-sovereignty narrative. And it's a big narrative. It's a big, big, big narrative. It's a narrative that's playing out in front of our eyes. And you've got to start putting money on that narrative. It is us taking control of the metaverse. It is us taking control of social media. It is us taking control of our own payments. We've already done that with Bitcoin. It is us taking control and getting our sovereignty back. That is the narrative that is playing out here. You don't believe me? Well, follow the smart money. Follow the smart developers. If I asked you who was one of the smartest engineers out there today, one of the smartest person, in fact, one of the only people that I know that's managed to build and successfully run 2 unicorns at the same time, Elon Musk is one of them. He's all in on Bitcoin. But who else? Who else is a visionary running 2 unicorns at the same time? Who else? Because you got to follow those guys. Engineer, which has smart money, which is running 2 to 3 unicorns at the same time. Who would that be? Well, that is Jack Dorsey. Why? Because he, not only are they building a decentralized exchange, but he actually joined the board of a decentralized social media company. I think it's called Blue Sky. He joined the board. He left the board of Twitter, which was a centralized entity, to pursue decentralized interests. The first decentralized interest that he went to pursue, decentralized money. He changed the name of Square to Block because Square wasn't good enough and Block was blockchain. And now what he's done is he's gone to this social media thing. At the same time, AAVE, the DeFi protocol, launched the Lens protocol, open composable Web3 social media protocol to allow anyone to create non-custodial social media profile. There's this decentralized social media narrative that's coming up. BBS, which is launching soon. This AAVE, which is launching soon. Jack's new play, which is launching soon. And so I picked up this tweet here that says, why censorship, not inflation, will drive Bitcoin adoption in 2022 and beyond. Bitcoin's narrative has always undergone several changes throughout the years. The first one is peer-to-peer cash system. Next one is payments. The next one is the inflation hedge. The next one was the store of value. The question is, why does the narrative need to change? For me, it's because people understand the world through stories. Bitcoin doesn't need a narrative to be valuable. It's a hard, unchanging, uncensorable store of wealth. But we're all humans, and humans like narratives. Humans like stories. So every couple of years, Bitcoin gets a new one, and I remember it. First, Bitcoin was money. Then it became inflation hedge. Then it became store of value. Amongst other things, Bitcoin is a check against institutional power. Therefore, Bitcoin's narrative tends to gravitate towards where institutional overreach is most severe. In 2020, the most salient abuse of power came from the Fed and global central banks. 2020 was the year of fear of the currency debasement went mainstream. Governments printed record amounts of money, flooding the world with liquidity. Eventually, people began to worry about inflation and negative yield, and that led to Bitcoin. But that narrative is now finished, and we're dealing with the aftermath of that, which is the inflation. But inflation and financial repression are the symptoms, not the core. The real problem is that central banks were able to take such drastic unilateral action. And now global financial markets hang on the words and facial expressions of one man. It's a stupid, broken system. In other words, the core problem is the raw power of the monolithic institutions. The symptoms, central banks will fight inflation, blah, 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 blah. Let's carry on. The answer looks as though it will be in censorship. The censorship is manifesting itself in 2 areas today: the financial system and social media deplatforming. The financial system we've spoken about, we saw it again in the GoFundMe saga because the financial system is broken. But now the next level in this is the deplatforming. And we're seeing the deplatforming happen right in front of our eyes. And just like 1 year after the social media, the banking catastrophe, we had Terra Luna growing exponentially, and we had Bitcoin growing exponentially. Now we're seeing the next level of that. And the next level of that is where we take back our corporate profiles, our personal profiles, where we take back our social media profiles, where we own the narrative, where we own our data, and where we can't be deplatformed. You're getting the calls for deplatforming of Joe Rogan. Spotify is a company, so it will make a business decision. They have two stakeholders to weigh. Creators, will removing Joe Rogan make them more or less attractive to creative? Subscribers, will removing Joe Rogan actually make more or less subscription revenue? Joe Rogan will force Spotify to decide between two groups: the woke left dying on the hill of COVID, the libertarian right dying on the hill of censorship. The question becomes, who is the more valuable customer base? Today it's Spotify, but eventually every company will have its Joe Rogan moment. Companies will have to make a choice appealing to their woke and their woke base and succumbing to increased censorship versus the emerging demographic that will push back. This is where Bitcoin comes in. Bitcoin has built the largest, most engaged communities in the world. This community cares about censorship resistance, libertarian ideals, and minimal government interference. And eventually this movement wins. And so he goes on. It's a very, very good thread. But ultimately what he says here in this thread is that the next narrative is actually all about taking back our sovereignty. And it's all about the social media narrative. And the social media narrative goes beyond payments. It goes into the metaverse and taking back our social media profiles. We want to own our own profiles in the metaverse. That's exactly what it's about. And then once you identify this narrative, and you know this narrative is coming up, you know it's about this narrative is coming up, well, then it becomes like clubbing seals. You know why it becomes like clubbing seals? Because every single pattern is exactly the same. Let me show you. It's exactly the same. Every single pattern is exactly the same. Most people don't realize that Bitcoin is still very early in its cycle compared to the last cycle. Crypto is now what this guy calls between wave 1 and wave, is not what I call wave 2 and 3. Wave 3 happened in 2017 in the spring, and 2017 with its insane old season. So he breaks it all up into the takeoff, the first sell-off, the fake top, and the cycle top. So I believe that low volume is an indication of the silence before the storm. And he's saying we're about to go up and we're about to do this. And he says this because he sees that ETH is confirming this. It looks like Ethereum is confirming this when almost exact cycle setup as the previous cycle, preparing for a huge old season. So he's saying we are right here. We are between the fake top and the cycle top. That is where he says we're going to be. And that's exactly it. Bitcoin runs first, then Ethereum runs, and then we go on to the big ones. And Alex Becker says it correctly. He says, it's just like the last time. Countless good game projects just floating at 5 to 7 million market caps as Bitcoin makes its initial big move up and hits its first resistance. Most of these market caps were 70 to 300 million by the meta cycle top, and I don't even think that was a true blow off top. The lowest market cap guys are the ones that were hit the hardest. And if you believe that the cycle is really turning, you can put your money into Bitcoin and ETH, or if you got some real balls, ones, and you want to get into the risky stuff, well, then you follow the Alex Becker degen approach, and you start investing in the smaller ones. Now, I know I promised you guys a bit of a shopping list, and I do have a bit of a shopping list for you guys here today. I wanted to talk to you guys about opportunities that I see in the DEX space, because when you analyze the DEXs, there are a lot of opportunities in the DEX space. So I did some analysis: SushiSwap, Uniswap, Astroport, Joe, Injective, Popsicle Finance, and Beethoven, and I've got some amazing buys for you. But I think what we'll do is leave the buys for tomorrow. I think let's leave that for tomorrow so we can spend enough time. We can give them enough of a narrative, enough time to actually explore that narrative even further. For today, the most important thing is that you become cyclists. You start adopting, you put on your cycling pants. You realize when we're getting into a new cycle, you look for the catalyst, which we saw yesterday. We saw that KPMG as the catalyst for the cycle. Then you look for the signals, technical signals, fundamental signals, meme coins running, that the cycle is going to continue. Then you look for the narratives driving those cycles, be it metaverse, be it decentralized social media, be it DEXs, which we'll talk about tomorrow. And then you just place your bets. And where you want to place your bets is up to you. If you're a degen like Alex Becker, well, then you place your bets on the lower caps. And if you're not, then just go into larger caps. But that's what we're going to do. We've got to become cyclists. And so for the rest of the week, we're going to cycle. We're going to cycle through the cycles. That's what we're going to do. Are you a cyclist, bro?
We're definitely at least going to be cycling through the small caps. Definitely. So today in the game show, I'm actually going through basically my entire scope of every crypto game that I'm looking at throughout 2022. And the different market cap ranges. Because as I mentioned on yesterday's show, and I've preached this on the show, those low market caps, if you're playing in them in the right times of the market, that's where the most money is. So we'll be going over a lot of games in different market cap ranges today on the show.
Give me some examples. Give me like some of the, give me some of like, what's the best buy that you're going to talk about today?
The best buy that I'm going to talk about today. Wow,
man. The best buy that you're going to talk about today.
I'm talking like 20 games. Okay, so let's see here. So the best buy today, man. I mean, you put me on the spot. So when I'm looking,
give me two or three.
When I'm looking at the market right now, I would say if you want to kind of put your risks in different buckets. I would definitely say one good buy today would probably be put me on the spot, Rand. Okay, let's go for larger cap. Let's go DeFi Kingdoms. It's about $8. For the mid cap, I would actually say for today, the mid cap I'd look at is probably Guild of Guardians at 84 cents. It took a dip.
Okay, wait. And this wait, before you tell me about the small cap, so which one would you say is the best small cap project out there?
The best?
I'm not telling you. You've got to watch Hustle Show. If you want to know what the best is, you got to watch Hustle Show. I cut him off so that you guys wouldn't be able to get the alpha. Yeah, you'd have to watch the show. That show happens in 3.5 hours. 3.5 hours right here on Banter, the last show of the day. Hustle Show. You'll get the best small cap out there. And let me tell you, metaverses actually are leading this recovery. So make sure that you actually watch that show. I've had fun. I've spoken very fast. I'm losing my voice. But I'm a cyclist. I'm going to go cycle. I'm going to go identify the cycles. I'll see you guys again tomorrow. Wear your cycling gear. Until then, cycle well, my friends. By the way, if you haven't been to our website, go to our website because the cycle story is very much on the website. This is they call the story the crypto opportunity of a lifetime. There's never been a better moment to invest in crypto now. Go and check it out. There's also an amazing story about Avalanche and why we think there's going to be an Avalanche recovery pretty soon. And then Sheldon's chart of the day. Sheldon has an amazing chart of the day. I think there's 2 charts a day from Sheldon. So make sure you go there. I'll see you guys again tomorrow.